What's up, everybody? This is Sunko, the Korean bro. Today is 2022, August the 12th. Uh, Let me get back to you soon because I've got something to do right away. So, wait. What articles do we have tonight? Asian shares rise on back of Wall Street rally. Okay. Dollar General is the big fish in little ponds across U.S. Here's why the CPI report will dictate the market bottom. Can Electronic Arts buck the downturn in video gaming? U.S. markets point higher ahead of a week of inflation data. It's been a slow but promising climb for Minerva Neurosciences. Activist investor Loeb dropped support for independent ESPN. Prepare for a record-setting quarter for cybersecurity stocks. The one hydrogen fuel cell stock to rule them all. Three solar stocks that will be benefit from the Biden tariff holiday. Okay, let's go through articles that I just picked from a market bit. Okay. First one we have is Asian shares rise on back of Wall Street rally. Shares climbed Monday in Asia after last week's strong close on Wall Street snapped a three-week losing streak. Many regional markets were closed for holidays, while Tokyo and Sydney advanced. All prices declined. Investors are watching for U.S. inflation figures. And Chinese economic data this week. The U.S. Labor Department will release its report on consumer prices for August on Tuesday and report on wholesale prices on Wednesday. On Thursday, Wall Street will get an update on retail sales for August. Coronavirus cases are still casting a shadow in China. Where about 65 million Chinese were under lockdown as of last week, despite just 1,248 new cases of domestic transmission, mostly asymptomatic, being reported on Sunday. All in all, the lower for longer growth picture remains the theme for China. The lower for longer growth picture remains the theme for China. Tokyo's Nikkei 225 gained 1.2% to and Sydney was up 1% at Mhm. It's an overall picture of what happened this week. Mm. And next article is about Dollar General is a big fish in little pond across U.S. Dollar General. I've seen this company before. Discount retailer Dollar General stock is up 5% for the year as it rides the recession wave higher. The company operates over 18,300 small boxes discount stores across 47 states in the US. It sells mostly consumer staple items comprised of consumables, seasonal items, home products, and apparel in that order of revenues. Despite this name, it isn't a $1 item store like a Dollar Tree. In fact, most items are well over $1 but are still discounted compared to major grocery and retailers like Kroger's, Target, and Walmart. Dollar General saw a core customers buy uh, more consumer staples over discretionary items, as underscored by the rise in sales of household items and drop in apparel. Unlike the big box retailers, it considers itself a small box discount retailer. Its stores average between 7,400 to 8,500 square feet per location, with nearly 75% of its stores located in towns with a population of less than 20,000 residents. While it carries some major brands, it has a thriving private brand, which saw increased penetration in the quarter. They are carving out their niche as the big fish in little ponds across the country. Hmm. Big fish in little ponds. That name really counts. Because they have their own niche, and in this huge retail market, they got uh, their own specific category. So they can target customers easily because they are targeting customers who look for cheap products. Cheap products that they use for they use inside their home. You know, big fish in little ponds. As mentioned earlier, Dollar General is not $1 store. It has successfully transitioned itself into a small box retailer with a growing grocery business, which it calls DG Fresh. It is literally attempting to mimic the big box retailers, but in a smaller format, complete with a loyalty program and a robust mobile app. Mm. To avoid a David and versus Goliath situation, the company has strategically located 75% of its stores in towns averaging less than 20,000 residents. So they don't want to compete against a big retailer company. So they only locate their stores at the area where less than 20,000 residents live. Uh, So here it says the company has strategically located 75% of its stores in towns averaging less than 20,000 residents. It's carved out a niche in small locations where the big box retailers wouldn't even consider. Okay. Next, here's why the CPI report will dictate the market bottom. The Consumer Price Index (CPI) is the inflation gauge. Okay, it's something that I have to know. CPI, Consumer Price Index, because I've heard of this term like over and over and over, and like it's like like it keeps it keeps like uh it keeps hmm, it pops up all the time that I think it's really important for me to know exact term, right? Okay, anyway, inflation is rate at which prices are rising and in turn eroding your buying power. Is a rate at which prices are rising and in turn eroding your buying power. Yes. It's released by the US Bureau of Labor Statistics on a monthly basis. It measures the average rate of change in prices paid by consumers for a basket of products and services compared to the year ago period. It measures the average rate of change in prices paid by consumers for a basket of products and services compared to the year ago period. Okay. The core CPI report doesn't include food and energy. That's a separate one. Mm. Food, it doesn't include food and energy, right? Okay. The report contains pricing data by industries and locations to derive a general overall CPI figure. Report is released monthly for the prior month's data. Mm. The CPI reached a 40-year high of 9.1% in June 2022, indicating the possible peak of inflation. The CPI reached a 40-year high of 9.1% in June 2022, indicating the possible peak of inflation. Incidentally, the S&P 500 index hit a low of 362.117 the same month. What does CPI measure? Okay, it's really important for me to know this concept because it keeps popping up, right? Anyway, let's read this aloud and let's get to know what CPI is, okay? What does CPI measure? The CPI is generally a measure of the cost of living for an average person. Measure the cost of living includes pricing trends for thousands of items through nearly 23,000 retail and service business and 43,000 rental housing units throughout 75 urban areas in the country. It collects approximately 90,000 prices in 8 categories from housing, apparel, transportation, education and communication, recreation, medical care, food and beverages, and goods and services. This is overall CPI and core CPI. The financial market pay most attention to the core CPI, which excludes food and energy prices. Due to their volatility skewing the results, the core CPI is used to measure the core inflation, which also exclude food and energy prices. So core CPI is different from overall CPI because the core CPI exclude food and energy, whereas overall CPI include food and energy prices, right? So, for example, the December 2021 core CPI was 7%, excluding energy and food. However, energy and food absolutely hit consumer wallets hard. Within the energy category, gasoline prices rose 50.8%. Within the food category, beef rose 22%. So now that we know that it's totally different, core CPI and overall CPI. But we all know that food and gasoline prices uh, affect our life a lot. So it's hard not to consider this, um, right? Anyway, let's move on. It can be used to gauge the yield curve in recessions during periods of monetary tightening and expansion. Okay, here's what the CPI means for the stock market. Okay, so consumer price index is really important measurement, right? And how this can be applied to stock market is important factor that we have to consider, right? So what the CPI means for stock market, as illustrated on the chart, the CPI and SPY had positive correlations until April 2021, when the CPI surged to 4.2% from 2.6% prior month, right? The CPI crashed up. Okay, let's read this in detail. The CPI and SPY had positive correlation until April 2021. When the CPI surged to 4.2% from 2.6% prior month. The CPI line crossed up through SPY line, SPY line. From that point forward, the negative correlation of divergence began rising. CPI resulted in falling SPI and vice versa. The big question is if the CPI will continue to fall, which means the interest rate hikes are finally kicking in. The SPI will continue to rise, The SPY would rise in anticipation of the Federal Reserve slowing down the magnitude and the pace of interest rate hikes, which is bullish for the markets. In a nutshell, CPI rises, the interest rate rises. Hmm. Oh, it's a difficult concept. Anyway, now we know consumer price index is, right? It's an important factor. Hmm. Let's read this aloud again. And the CPI is the yearly measure of the cost of living for an average person. Includes pricing trends for thousands of items through nearly 23,000 retail and service businesses and 43,000 rental housing units throughout 75 urban areas in the country. Okay. Can Electronic Arts balk the downtown in video game? Okay, what is this? Video game publisher Electronic Arts stock has been weathering the storm from the demand shock in the video gaming industry. Video games are a discretionary item, and rising inflation is causing consumers to pull back on their discretionary spending. So, rising inflation also change the behavior of consumer. Consumers are less likely buying products because it's expensive, right? Clues to the weakness was indicated by the guidance warning from top graphics chip maker Nvidia. Video gaming is highly interactive and provided great entertainment values for the money, right? Right. Video gaming is highly interactive and provides great entertainment values for the money. The company believes the darkening macroeconomic and geopolitical headwinds are driving more people to escape. The company believes the darkening macroeconomic and geopolitical headwinds are driving more people to escape with video gaming, as evidenced by the 20% growth in its live services bookings, which represents 70% of total bookings. Its sports video gaming franchises are driving consistent gains as they release new versions every year. Its EA Player gaming network has amassed nearly 600 million members to date as it builds its own custom ecosystem to fortify its moat. It is enough for the company to balk the downturn in video gaming. Revolt of the gamers. FIFA out. Here's what the chart said. It's definitely in the game. Hmm. Hmm. U.S. markets point higher ahead of weak inflation data. Wall Street pointed higher before the opening bell Monday, building on last week's strong finish ahead of a host of new inflation data from the U.S. Futures for the Dow Jones Industrials rose 0.3%, and futures for the S&P 50 climbed 0.5%. The U.S. Labor Department will release its report on consumer prices for August on Tuesday, and report on wholesale prices on Wednesday. On Thursday, the Commerce Department releases retail sales figures for August. All three reports could provide a peek into how Americans are reacting to inflation that is close to four-decade highs. Hmm. Prepare for a record-setting quarter for cybersecurity stocks. Okay. It's an interesting article. The internet security stocks have been in a deep correction all year because of fears of slowing growth, but still, there's no sign of that yet. Results from Checkpoint Software to Sentinel-1 prove that demand for cybersecurity is not only still strong, but accelerating on many fronts. Checkpoint Software Okay, prove that demand for cybersecurity is not only still strong, but accelerating on many fronts. The latest news is from Zscaler Inc., which offers cloud-based cybersecurity solutions up to and including the enterprise level. The company just announced the top and bottom line bid and increased its guidance, which is noteworthy not only because the sector is set to outperform in the quarter third and quarter fourth reporting period, but because the entire sector has been lagging behind the S&P 500 since the pandemic bottom. That's silly. Cybersecurity stocks are as fundamental to the outlook of the internet and the digitization of business as any part of the IT picture. Hmm. Cybersecurity stocks are as fundamental to the outlook of the internet and digitization of business as any part of the IT picture, and demand is driven by a widespread and growing need for safety. Each time the good guys make an advancement, the bad guys make one to match. Okay, let's read this. Zscaler leads with robust results and outlook. The cybersecurity sector has been lagging behind the S&P 500 since the pandemic bottom. But Zscaler is clearly a winner, leading both the group and the broader market. Okay, the stock is highly valued at 238 times its earnings. Hmm. But that is factoring in a wicked hot growth rate that continues to underestimate the company's strength. Hmm. The hmm, $380 million in net revenue is up 61% over last year and beat the market beat.com consensus figure by 400 basis points, making the fourth consecutive quarter of growth in the range of 61% to 62% range. The sequential growth is down a hair from the previous quarter, but well above the consensus, which leaves annualized growth at 62%, an acceleration from the previous year, and strength is expected to continue into the coming year. The analysts are driving Zscaler to new high. Okay, Zscaler. Let's look at chart of Zscaler. I myself also spent some money on Zscaler. Uh, 21%. Wow! 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 Um, hmm, hmm. Mm, we had a 21% upward trend last night. Okay, September 9th at close. Mm, it's a good sign, right? Mm, And now let's go over to three solar stocks. Three solar stocks that will benefit from the Biden tariff holiday. Sunrun. Okay, Sunrun. It's also on my radar. Sunrun. Mm, hmm. Okay. Has one of the largest installed bases in the United States. The company is known for its home solar and battery storage solutions. including solar panels, racks, and solar leads. The San Francisco-based company has over 600,000 customers across 22 states. 600,000 customers across 22 states. Unlike the other two stocks on this list, Sunrun shares are flat in 2022. That puts fund stock well below the current analyst expectations of $48 per share. But you can't blame that on revenue. Sunrun is posting strong sequential and year-over-year revenue growth. Hmm. And with the CAGR projections for the industry, that's not likely to slow down. Hmm. First Solar um, will be one of the solar companies to benefit the most from the Biden administration inflation reduction. Specifically, the bill provides $40 million in aid to solar manufacturers. First Solar is a US-based company that already has manufacturing infrastructure up and running. The company produces solar power systems and modules and is known for its proprietary thin film module. Hmm. This allows for better performance in low light and hot weather. Plus, the modules are larger than other modules, which helps reduce the cost per watts. First Solar plans to increase its manufacturing footprint with the help of the money. Blah blah blah. Anyway, the point is, uh, Biden. Uh, uh, there are three solar stocks that will benefit from Biden tariff holiday. And one of companies that we have to look at is a Sunrun, because Sunrun has a lot of customers across 22 states, and they also focus on two things, which are battery and solar panels. So mm, I'd have to keep looking at Sunrun. Mm. The other two are still good, but I still think major one is Sunrun. So I'm just gonna stick to only one company. New Apple iPhones, Apple Watches are off to impressive starts. Stock futures rise as investors await key inflation report. 12 things we're hearing in Wall Street conference season. A snowflake stock a buy as your light quarter gives bullish investors ammunition. Kevin O'Leary says these are the best assets to own as the inflation stays quite hot. A second leg down for the bear market in stocks with exposed street naked swimmers. 15 stocks billionaire investors agree it's smart to buy now. Carvana stock is grossly undervalued, analyst says. Okay. Quiet quitting has a polar opposite. Uh, the Fed fired movement of people working hard to retire early on a massive stash. It's an interesting article, so I'll just read it, okay? Hmm. Biden to hit China with broader curbs on US chip and tool exports. Three stocks you should consider shorting this week. Is Zoom a buy or sell as Microsoft battle intensifies in business market? Software growth stocks to watch as 2023 estimates head lower. How rich do you need to be to make wealth management worth it? How much can you spend in retirement? Answer these questions first. Okay, now let's read this aloud. Okay, I just picked like seven articles. So the first one is new Apple iPhones, right? New Apple iPhones and Apple Watches are off to impressive start. JP Morgan. September historically isn't a good month for the broader stock market, but it could be a good month for arguably its most important stock, Apple. Demand for Apple's latest suite of iPhones and the pricey new $800 Apple Watch Ultra appear look strong, according to various analyst notes calmed by Yahoo Finance. Apple launched the iPhone 14 series on September 7. It was available for pre-order on September 9, with delivery at home in-store pickup starting on September 16. The new AirPods Pro and Apple Watch Ultra are currently available for pre-order and begin rolling out on September 23rd. Apple stock is up about 2% since revealing the new products. Hmm. Okay, it's up about 2%. Okay. Here's what JP Morgan analyst Samnik Chatterjee, who has an outperform rating on Apple stock and a $200 price target, wrote about the launch. iPhone demand indications are strong following the launch, and while similar to last year, the mix continues to be more favorable towards Pro models. Lead times for two Pro models are already more extended. Relative to last year, delivery lead times have already reached extended length 1 day after launch versus extended lead times 1 week post launch for the iPhone 13. Hmm. Okay, the point is, they just launched new products and stocks of Apple rose 2%. Its main point, right? Stock is up about 2%, right? An overall demand picture for the Apple's latest product should. Okay, next one. Stock market new live update. Stock futures rise and investors await CPI data. CPI, Consumer Price Index. Okay, let's see. U.S. stock futures gained Monday as Wall Street inched closer to highly anticipated inflation data this week. U.S. stock futures gained Monday as Wall Street inched closer to highly anticipated inflation data this week. Futures tied to the S&P 500 and tech having also composition each climbed 0.5%, while futures on the Dow Jones Industrial Average rose by 4.4%. Hmm. Next one, 12 things Yahoo Finance is hearing as Wall Street conference season hits up. Morning brief. Not one executive I talked is seeing trends in their business that hence the U.S. economy will be in a recession in the first quarter of 2023. That said, no one is speaking with a tone of an economy poised to crank into a much stronger gear. Hmm. Okay, let's read this. This is an interesting article. 15 big smart money investors are famous for breaking rank from the S&P 500 investing crowd. So when you see a few actually agreeing on a stock, it's worth paying attention. Meta Platforms, uh, Ali Lilly, Amazon.com, Alphabet, and Microsoft. Ali Lilly. What is this? Ali Lilly. Hmm. Appear for the first time or grew in size in the portfolios of three or more of 47 major institutional investors tracked by Empire Financial Research on the second quarter. That makes these stocks highly unusual. The remaining more than 380 new or expanded positions only show up in two or fewer of the portfolios. Don't agree on much. I've always skimmed these feelings both to see what institutional investors as a group are doing, as well as to get stock ideas from some of the investors I respect most. Meta platforms, Cgen, hmm, uh, top stocks have hiked their dividends for at least 25 straight years. Ugliness. Hmm. Okay. This one is interesting. Hmm. Cavino really. Okay, in July, U.S. consumer prices spiked 8.5% from a year earlier, down from 9.1% in June, but still near a multi-decade high. Uh, mm. The Fed has already raised interest rates multiple times this year to slow that worrisome trend. It's uncertain how the economy will handle higher interest rates, and stocks are getting sold off as a result. The S&P 500 is already down roughly 15% in 2022, but investment mogul and short tank store Kevin O'Reilly still believes in holding stocks in a rising interest rate environment. Okay, they still believe holding stocks in a rising interest rate environment, even as rates go up. Equities are the place to be because fixed income gets hurt a lot more. He says in the CNBC interview from earlier this year. Hmm. Companies with pricing power focus on energy. Okay. Against the current backdrop, O'Leary looks for companies that have the ability to raise prices without too much pushback from consumers. Where you want to be in equities, particularly when rates start taking up, is in companies that have pricing power, O'Leary says. In other words, their goods and services are necessities for people, so they are willing to take a small increase in price, sometimes a larger one as rates go up. But where would you find businesses with pricing power? Right now, healthcare looks really good, and also consumer cyclicals look very good, O'Leary suggests. He adds that investors should pay attention to companies that produce things people still need during times of inflation, especially what they eat and what they drive. Focus on energy. O'Leary singles out the energy sector as a particularly prudent place to park some money during periods of high inflation. Fuel to power your car. Heat your home or cook your food is more costly. As a result, energy stocks have delivered outsized returns for several months now. Even with the recent pullback in oil prices, shares of big oil stocks, ExxonMobil and ConocoPhillips are up roughly 75%, 78%. Uh, Technology stocks, on the other hand, aren't doing so well these days. The tech heavy industry is down about 23% year to date, right? O'Leary adds that tech stocks with high P&Es are experiencing extra selling pressure because the Fed stance on losing money is changing. O'Leary says owning the ETF is a good inflation fighting strategy. ETF. Hmm. It's what I read before. So, basically, this billionaire guy says that we have to think about two factors. Two factors are to focus on energy, and companies with pricing power. Uh, if company has no competition whatsoever, then it can raise uh, price of product because it dominates. Nobody can compete against this one. So uh, in this recession period, if you got chance, then you better put your money into the one that dominates the market. And the second is energy company because we have to fuel the car, we have to heat our home, and we have to cook, right? Without energy, we cannot do anything, pretty much. So energy is a necessity. So uh, in that sense, you know, mm, investing is a pretty good strategy, right? Carvana stock is grossly undervalued, analyst says. Okay, let's look at this. Because a few months ago, I read about Carvana stock. At that time, uh, expert didn't say good words about this company, and now there's an article that says it's extremely undervalued. And let's see what that is. Declining prices for used cars, rising interest rates, and a series of regulatory challenges have pummeled Carvana stock over the past few months. It's time to plunge back in and buy the shares, according to Piper Sandler. Alice Alexander Potter upgraded shares of Carvana to overweight from neutral on Monday. Even as he lowered his price target to $73 from $98, the stock is now a tenth as valuable as it was a year ago, suggesting it is now grossly undervalued, he wrote. Oh, come on. Okay. Is Zoom a buy or sell as Microsoft battle intensifies in business markets? Okay. I cannot read it unless I subscribe it. Hmm. Okay, today this is it for today, and I'm gonna see you tomorrow. Okay, bye bye.